Hello there, it's me, Lumosi Charts. I'd love to welcome you to this live stream. It's always an honor to be joined by you, and I would love to thank you for your time and your effort to join me. Today, I just want to dive into the top three trading rules. I think this is very, very important for you to understand, all right? But before I go on, I'd love to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, Tim Sachs, who wrote the foreword to the book for the penny stock course, and finally Matthew Creter, who wrote the book Rocket Stocks, and you can find all their books on Amazon Kindle. Okay, that's what am I looking for? Mm, so, uh, again, it's always an honor to be joined by you. So let's just dive straight into it, all right? So number one, after analyzing setups. Oh yeah, by the way, after this video, I'm going to give you like a demonstration, okay, on how to use Finviz. So just stick around until the end. I think yesterday I showed you a demonstration of risk management, and I think I'll show you today what happened on yesterday's stream. I'll show you exactly what happened. Uh, and how to place trades. So number one says, you have to analyze the setups and place limit orders for the next trading day before the next market open. This adds structure and removes intraday decision fatigue. So what happens usually during market intraday market open hours is the stocks are very excuse me, price patterns are very like volatile. Okay, price patterns are very, very volatile. And so you have to position yourself in quiet times because you want to trade during quiet times. So that's why I wrote this rule. I said, after analyzing setups at market close, place limit orders for the next trading day. I think I'm going to place a poll. Let me just set up a poll. Start a poll. Just a second. Let me create a poll. All right, so I've started the poll there. Asking you which margin level you use, right? Which margin level would you use for SP 500 futures trading, 10x or 5x? So just let me know in the poll. I've put a poll in the chat. Uh, Let me know the margin level that you would use. Okay, so let's dive straight into it. So that's rule number one. Rule number two is look for trading opportunities during market close on Finviz only. So I'm only focused on on Finviz only trades. That's what I'm focused on. Right, so I'm looking for trading opportunities during market close on Finviz only, such as EMA or SMA alignment, candlestick pattern confirmation, and the RSI range. So this is very important, right? These are the top three important things. Like, I'm looking for that alignment, I'm looking for candlestick pattern confirmation and RSI range, because I want to keep it simple. All right, I want, at the end of the day, I want to keep things simple. I think that's what matters, keeping things simple. And then finally, my goal is to identify high probability S&P 500 setups that align with my trading edge during quiet hours when the market is closed. So that's the key to this whole thing. You know, the key is to identify during market close. So yesterday I placed a trade on this stock. The signal is no longer valid, but I wanted to show you I wanted to show you the risk management level, right? So what I did was I only placed 60% of my total capital. So my total capital is $8.6 in this example, but I only placed 60% of this position using 10x margin. And as you can notice, the price was between the two moving averages. So this orange line like represents 50-day moving average, and then this blue line represents a 20-day moving average. So you can see that the orange line is valued at 67.76, the blue line is valued at 67.94. And so the advantage of placing a limit order was I placed it right in between these two ranges, right in between there. As you can see, I placed limit order here. Then you also notice that the range was between 40 and 60, just like I explained in the top three rules, right? Just like I explained in the top three rules, where the range has to be between 40 and 60, just like I explained here. All right, and then I'm going to show you another thing, because you could be thinking, all right, why are you focused on S&P 500 trading only? And so in this documentation, I'm explaining to you the blue ocean strategy. Right, so it's very important that you look at things with a strategic mindset. Okay, it's very important that you look at them with a very strategic mindset. So we're not focusing on forex, we're not focusing on crypto, we're not focusing on penny stocks. We are focusing on futures, but these futures are related to S&P 500 stocks only. We are not using TradingView, MT4, Thinkorswim, or many other scanners. We're only focused on Finviz only. Okay. Indicators. We're not using RSI, MACD, Bollinger Bands, and those other funny indicators. We're only focused on three: price action, volume, and key levels. And our scan only takes like 10 to 30 minutes daily. So we're not spending 2 to 5 hours like studying a market or watch lists. It's just 10 to 30 minutes. All right. Emotional stress. Usually when you're dealing with these other advanced techniques, it's high FOMO and overload. So emotional stress is high. In my strategy, in this strategy I'm teaching you, it's very low. It's very simple. There's no emotional stress. Expertise, you become general when you are focusing on these trading tools like this. All right. In this one, you're becoming a specialist in the S&P 500. The cost of tools is high when you're dealing with these things. All right. There is a lot of high cost, but with Finviz the cost is very low. So the strategy, and this is what I'm sharing you, because I want you to understand the business strategy in my mind, right? And the reason why I decided to focus only on this sector. Now, if I wanted, I could have mastered Forex. If I wanted, I could have mastered crypto. Well, I do know how to buy Bitcoin, but and once in a while, maybe I will be talking about Bitcoin. But I'm really focused mainly on S&P 500 stocks. So this is how I formed the strategy. All right. So again, you may be thinking, what's the key of strategy? So basically, strategy, the key to strategy, it's like market psychology. All right. Market psychology is all about strategy. And so what you're trying to do is you're trying to create a strategic thinking uh, type of mindset. Okay, so uh, that's what we're trying to do. Okay, we're trying to create a strategic thinking type of mindset. So that is very, very important. So we're eliminating trading view, we're eliminating forex, crypto, and random markets. In this removes noise and competition. There's so much competition in the mentorship trading industry right now. There's so much competition. So I was thinking, how can I differentiate myself from other trading mentors at the same time help you? Listen, I'm going to share my goal with you right here, right now. Something tells me I should share my goal with you. I am going to become a powerful public streamer because this will enable me to render the world useful service that is needed, and because it will yield me a financial return that will provide me with the necessary material things in life. I will concentrate my mind upon this desire for 10 minutes daily just before retiring at night and just after rising in the morning for the purpose of determining just how I shall proceed to transform it into reality. I know that I can become a powerful and magnetic streamer, therefore I will permit nothing to interfere with my doing so. Signed, Luwasi Charts by 31st June 2026. All right, so that's my goal. That's my goal. So that's why I am even promoting FinViz. Check out FinViz, and the link is in the description. This is the blue ocean strategy, and I'm sharing with you my strategy. All right, that's why I'm only focused on FinViz, because it's going to provide me a financial return for the necessary material things in life. At the same time, I will help you, right? So that's the point of me doing the affiliate as with Finviz, to provide myself with the necessary material things in life while at the same time helping you. So remember, we're reducing and lower cost and the complexity. The problem with these indicators and things on such guys like TradingView, Thinkorswim, and all these funny robots that you will find on MT4, uh, they're expensive. But with Finviz, I mean, it's just lowers cost and complexity. And I'm going to show it to you. We're going to do a demonstration right now. If we find a stock, then we have found the stock. If we don't find the stock, then we have not found the stock. So we're going to actually do a demonstration. You're going to see for yourself. I'm going to show you how simple it is. So remember, we're focusing on S&P 500 volume and institutional flow, and this increases expertise and consistency. I want to talk to you about institutional flow. So if you listen to people like Robert Kiyosaki and Ken McElroy, they will tell you that money is a system. So all that money that we are following, we're just following what the institutions are doing. The money managers, the hedge funds, the pension funds, the smart money, people who know what they're doing. Those are the people we're following. So what are we going to do? We're going to create an S&P only trading identity and Finviz edge. So this creates unique value and different from 95% of traders. So when you are following this system, you are different from other traders. All right, you are not like them. You are not like, they're not like us. They're not like us. Yes, that type of song. So you're not like them. Okay, you are different. So now I want to dive into the presentation of my strategy. So the strategy is very easy. So you look at the screen here. All we're saying is the bullish candlestick counter attack pattern should, if it doesn't touch the 50-day moving average, which is above the 200-day moving average, this press pattern is called the golden cross. If it doesn't touch this, We don't trade this pattern. Okay, we don't trade this pattern. And the golden cross. So the way the golden cross is, it's basically a 50-day moving average above the 200-day moving average. So this is what you want to trade. You want to trade when the bullish counter attack, which is the candlestick pattern, touches the EMA. This is what you want, and the golden cross is right here. So this is the pattern that you want to trade. And I have a rule about this. I say the bullish counter attack pattern must either sit on the 50 EMA with its body, or its shadow must at least touch the EMA. Otherwise, I ignore the signal. So can you do this physically? Yes, you can do it manually. But FinViz has made things so much easy. So I would rather you use FinViz. Okay. So you can take this strategy and apply it to any market. Just make sure you manage your risk. So RSI between 40 and 60. So that's your strength. RSI between 40 and 60. Volume increases. Make sure there is a golden cross. Now only take a bullish counter attack if the body or wick touches or sits on the 50 EMA while price is above the golden cross. This is very, very important. Then finally, the last part of this presentation, we're going to see how to trade it on FinViz. This is very important. Okay, so number one, the price should have crossed above the 50 EMA. Number two, 200 EMA below the 50 EMA. Number three, the candlestick pattern should equal the hammer. So the hammer is basically the candlestick chart pattern. Number four, the index should be S&P 500. Remember, that's what we're focusing on. Number five, the RSI. Yo, that reminds me, I saw a doctor. I saw an advertisement of a doctor, and there was this debate that I had with some youth, and they kept saying, "Nah, that's witchcraft. That's witchcraft." And I said, "No, that's a herbalist." Okay, all right. He probably knows me who I am and watching this video. Shout out to the herbalists out there. So remember, the RSI should be between 40 and 60. Then the price should be below 200, the 220 EMA. Now, when the price is below the 20 EMA, this is what reinforces this right here. Okay, so you don't really have to put this in FinViz. I'm going to show you my screen, and it's so easy. So watch for a green volume bar below the candlestick pattern. So for the free version, it's more like you're driving a Honda Civic 2001. These are the candlestick patterns you will find: the inverted hammer, the hammer, long lower shadow, Marabozu white, which is a rare pattern. Inverted hammer is quite common. Hammer is quite common. Long lower shadow is common. We also have the doji, three other ones, which is the doji, spinning white top, spinning black top, which are fear-based indicators. These are mainly support-based indicators. Okay, and then for the paid version, which I want you to get, focus on the counter bullish attack, the counter bearish attack, bullish harami, bearish harami, and all these other patterns. So before we dive into the demonstration, I'm just going to show you some proof of concept to prove to you that this strategy actually works. So I don't remember the date, but I remember the month. This pattern happened in October. Let me show you. I'm literally doing this manually, this presentation manually. I'm literally doing it manually. I have not built any slides for the presentation. Okay, so it's just a manual presentation. So let me show you. So this is what happened in the month of October. I made profit on this one. So you can see the profit here. I made $7 on this trade, and then you can see what happened here. So the entry was somewhere here, and it took about 7 days, and you could see the breakout right there. So the entry was somewhere here. It was right below here, somewhere here, and you can see the price breaking out. You can see, so I made about $7 on this trade. So the entry was here 163, and the exit was 194. I did not pick the exact top, but at least I got a chunk of the move, which was 17% at 10x. Do the math. Okay, 17% times 10x. Do the math there. So that's the proof that the strategy works. Now I'm going to show you, we're going to do a demonstration together. We're going to do a demonstration together now for Finviz. Okay, so I'm opening Finviz now. We're going to do a demonstration for Finviz. See what you're here. So we're going to scan for stocks right now. There we go. Perfect, perfect, perfect. By the way, shout out to Finviz, shout out to OBS Studios. That's the one I'm using for streaming. Check out OBS Studios if you want to stream like me. So now we're going to go to Screener. So I've already done it here. So I'm not going to do a full demonstration. If you want a full demonstration, check out my earlier videos where I literally break it down, the full demonstration. So you can see here, price below the 20-day moving average, price has crossed 50-day moving average, 200-day moving average below the 50-day moving average, spinning black top. You come to the description. It's like 4 indicate, like 5, they're just 5. Like that's how simple it is. And I do pre-market close, right? So if you come here, you can see S&P 500 description on the index there. So it's that simple, right? So already we have found two. I think that's Walmart. And Walmart has got very nice gaps. Walmart has very nice gaps. I wish it was available in the options trading market. Walmart gaps very nicely. So we have Walmart, WMT. So we already have two that we can trade, and they're all reversals. And this is a deep, deep reversal on Walmart. Very deep reversal. We're going to dive into Walmart. All right, so this was the spinning black top. Let's go to the spinning white top candlestick pattern. I'm actually taking notes. So spinning white top, there is nothing. Let's go to the doji. So every day there are trades every day. It's very rare that on a day I don't find a trade. It's rare, and usually at the best, worst case scenario, I'll find maybe just 2 days. I can go maybe 2 days without finding a stock to trade. That's worst case scenario. But every single day there is always something to trade in the markets. Did I check Doji? I think I did check the Doji, yeah. So every single day, and that's what makes this strategy so awesome. So we're checking the doji candlestick chart pattern, not checking the inverted hammer. So it's very nice, it's a very nice system. It's very simple. Now imagine having like more candlestick patterns to check from. And that's why I want you to get the premium versions like the Ferrari, all right? You don't need it, especially with my system, you don't need it, but think of it like driving a Ferrari, all right? Do you want to drive a Honda or a Ferrari? Probably in the future, I will get the elite version when I start making money from this skill, right? So this is just my startup phase. I'm not yet making like significant amounts, but in the future, I will. All right, so I think we've only found from one pattern, which is the spinning uh, black top. So meanwhile, I just left something on the stove. I'll be back. Um, while I check on that thing, let's study Walmart because it's the one that has piqued my interest. Look at the range; it's between 40 and 60. This is crazy. Also, take all right, Walmart. So, what's the catalyst? Is there an earnings report? So there'll be an earnings report next month, and there'll be a yeah, there we go. Walmart and Ilya announced today a nationwide collaboration. So we have breaking news. We have breaking news here. Walmart and Eli Lilly announced today a nationwide collaboration allowing Walmart pharmacy customers to pick up Zepbound at direct-to-consumer price. Basically, there's breaking news. All right. So these are the kind of patterns that Team Sykes likes, where there's breaking news. Plus, we have an earnings report coming through. So this is called the spinning black top, and you can clearly see the pattern here. It's so clear. It is so clear. You see. I'll be back. And just go check on the stove. What I've left on the stove. I'll be back, but study this pattern. I'll be back. Hello there. So, as you can see, this is very similar. You can see this is the spinning block top. It has touched the 50-day moving average, and it's way below the 20-day average. So, as you can see, it's very similar to this right here. So, this is what you are looking at right here. Okay. Mm. Extreme quality has dropped. Interesting. So we have breaking news, and this is very important. So just study the chart uh, right now. I'm still here. Study the chart. And Team Sykes talks about breaking news. So this price pattern is being influenced by breaking news. So let's just study it. So with this one, you can see there is an earnings report coming nearby, and that's the catalyst. Even though there is no breaking news. So earnings will be before market open on the 30th of October. So I want you to notice that the price is above the 50-day moving average by 0.22%. It's above the 200-day moving average by 17%. And it's below the 20-day moving average by 2%. So remember, that's the strategy that we are using. It's called L3 Harris Technologies, Aerospace and Defense. So one thing I want to tell you about is, usually being in one trade also means that you will not be in other trades. Okay. So let's check on how our trade, the one that I entered yesterday, let's check on how it's doing. So once you enter a trade, you don't want to excuse me, you don't want to enter multiple trades. So it crashing is a good sign. That means ideally we want the price to crash. So if it has crashed, this is very good because that means our trade was executed. Okay, or we missed it. So we'll see how it performed. Right, so from the look of things, I don't think our trade executed because it opened at let me see. Yeah, our trade did not execute. It opened at 67.42. So the trade did not execute. And you see this, that's why it's important to do limit orders. So again, this is live. Let me see. So I'm going to enter a new trade right before your eyes. I'll even take a screenshot. So that means my broker did not execute my trade. Just a second. Oh yeah, so come to find the broker did execute my position. And you can see, look at how terrible this performance is. It's like what? 2%, 2%, 2%. So I think I'm down like 15% on my position. And that's why it's important. And this is where liquidity comes in. Okay. So liquidity is very, very important. Liquidity is very important. That's why remember this liquidity here. So 60 to 40. So right now I'm down on my position by 15%, which is half of my liquidity because my liquidity is 40%, right? So half of my liquidity, I'm down 15%. So 15% is in the liquidity. And that's why risk management is very important. Because you just need to understand, like, not all trades will go your way. Unfortunately, that's the way this game is. So the position is here, but I'm down 15%. So that's how it is. That's how this game is. So sometimes what they do is when they crash the market, that means they've sold the orders. That's how it is. So it doesn't mean when the market has crashed, then you exit your position at a loss. No, no, no. Hold that bad boy. Hold that beast. Okay, hold that bad boy. Hold that beast. They don't always go straight up. That's how these moves are. Mm-mm. So that sell off, it's okay. Right? It's okay to have a sell off. That's why we have liquidity positions. That's why we have liquidity positions. So you want the sell off to happen, in short. You want the sell off to happen. Okay? You want the price to crash because look, they are selling your position. And this is very important to review our trades. This crash is the most important part of trading that you need to understand. Because remember, they have to sell your position. Okay? They have to sell your position. That's how it is. I'm looking at the after hours and I'm seeing another drop in about 3%. So they have to sell your position. They have to sell your position. So you're not the only one who has limit orders. And so that's why it is very, very important, you know, to have risk management because not all strategies go according to plan. That's why I did the 10x margin. That's why I managed my risk. So even with these uh these other stocks here, which is Walmart and L, something like that, you have to you have to account for the fact that it may not go your way. Okay, so it will not go straight up. So the logic is they have to sell your position, right? So that's why it crashes. They have to sell your position. When they sell your position, first they'll sell your position. Someone will buy it, or someone will lend against your position. Then you can expect to see profit in 7 days or 10 days. So remember, we are still on this journey together. So this is day two. Day two, the price has crashed. Okay, so we'll keep chasing the stock. We'll keep chasing it. I'm not chasing, we'll keep following up on it because I have documented it. Right, I have documented it. Remember, in 10 to 7 days or in 2 weeks, because remember, this company, they have a dividend earnings. Uh, can I go back? I don't know if I can go back. Can I go back or go forward? Which is it? I think it's go forward. Because remember, they have a dividend earnings report coming in 2 months. And so it is very important to remember that. So I'm not going to hide anything. You're going to see my trading journey. We're going to do it together because at the end of the day, trading is about discipline. All right. So I'm showing you via the trade that I entered. This is the trade I entered yesterday. So it's good news for you because it means you can still enter the trade if you had to. That's how it is. So again, there was no breaking news, there was nothing fancy, but there is something I'm waiting for, and that's my catalyst, which is the dividends report in November. 2025. Or maybe there is no dividends report and I'm just imagining everything. Okay, fine. Maybe there is no dividends report. Whatever. But at the end of the day, this appeared on our screen. And so we are going to hold it. We are going to hold it. Now it has passed our stop loss position, but we're not going to exit that. Remember, even as you are trading, risk management is important. That's why we had that risk management in place. We're liquid 40% on our position. 10x, 60%, 40% liquid.